I'm gonna show you guys something. I did a market study. Dow Jones. I just pulled up the Dow Jones in MarketSmith and looked at the quarterly chart. You can go back and look at Dow Jones from 1915. Okay, 1915. So out of the 102 years, there were 56 down quarters, excluding sideways bars, and obviously excluding bars that went up. So 14% of the time, market went lower over the past 102 years. So that means the market has gone up or sideways 86% of the time. And I did a more recent study of NASDAQ from 1970s. And I pretty much just marked, periods that were good for swing trading and periods that were like tough for swing trading. Now, it's obviously not an exact science, but my conclusion was 62% of the time, NASDAQ has been in favorable conditions 62% of the time. That means like up. And 38% of the time it's been going down or sideways over the past 40 years or so, 45 years. The average bull run lasted 9.4 months, and the average unfavorable period lasted for 7.2 months. And we are like 6 months in a very, very good period. And the median period, good period, lasts for only 7 months. And we are 6 months in or so. So if someone comes and tells you the market only goes up, if someone on Twitter tells you stocks only go up, it's not really true. Stocks go up and down. Yeah, the only way you learn is the hard way. You will never learn trading from a book. You can get trading ideas from a book, trading concepts from a book. But the only way you learn is to learn the lessons from yourself, from the pain of doing the wrong thing. From taking a loss or not taking a loss, or from missing out, or all of these things. They're very painful, all of them. And it's only from the pain that you can learn. Yeah, I'm gonna show you the perfect stock. I'm gonna show you Taser. I have it in my database. Now it's called AAXN. I'm gonna show you the perfect stock. This thing had several high tide flags. I'm gonna show you guys. Okay, pay attention now. Whatever you're doing, stop it. I'm gonna show you guys something. Instead of reading a whole book about it, instead of buying this book, the perfect stock, for 423, I'm gonna show you guys. I'm gonna show you the perfect stock. Okay. This is what I've been talking about daily. This is from my Evernote database. Okay, Taser. So Taser went from like, I don't know, 50 cents to over 30 bucks inside of a year. That's like a 60 bagger. Okay, I'm gonna show you guys something. Pay attention. These are things I keep talking about every day. This is like 2001. Okay, okay. So, yeah, it went from like 35 cents to that was almost 100 bagger in a year. Okay. Now pay attention now. Do you remember I keep talking about the 10 and 20-day moving averages for momentum stocks? Pay attention. This yellow line is the 20-day moving average. Unfortunately, I don't have the 10-day here, but you can just imagine the 10-day goes something like this. It's above the 20-day, okay? So this is a high tide flag. You see how it's surfing the 20-day, goes sideways, builds a flag. This is a flag, okay? Now, this goes up. This thing pretty much doubles, pulls back a little bit, starts surfing the 20-day again, builds higher lows, gets tight, breaks out again. High tide flag, okay? Pulls back, undercuts the rising 20-day. Keeps going higher. Oh, and on this chart, apparently, I have the 10-day. But anyways, it keeps riding the 10-day moving average higher. Pulls back, finds support on the 10-day, goes sideways a bit, builds in a higher low, finds support on the rising 20-day, builds a higher low, or builds a series of higher lows, puts in a tight range, breaks out on volume, boom, you have another high tight flag break. Goes up about 50-60%, pulls back to the rising 20-day, builds a series of higher lows, tight range, breaks out again. Okay. So it goes from what, 750? So it more than doubles in a month. Okay, from this high tight flag, pulls back again to the rising 20-day, undercuts the rising 20-day, but puts in a higher low, reclaims, builds in a tight range, builds higher lows, breaks out again. And this time it more than doubles again. Okay? This is why I keep talking about the rising 10 and 20-day moving averages, higher lows and tight ranges. That's literally all I talk about every single day. I just saved you $4 and probably hours and hours of time. You don't need to buy this book. Follow the rising 10 and 10-day moving averages. Boom. This is a perfect stock, okay? I agree with the book. This is a perfect stock. I just saved you several hours of time. Now go find. If you want it enough, well, then you want it enough. Like, you know, people contact me, like people write to me all the time, people who don't want it enough. And I usually just ignore them because I find these people annoying, even though they can be really nice. Someone, you know, DM me on Twitter yesterday, like, oh, I signed up to Pradeep's site, but there's so much in the, what was in the tutorial or whatever. I was bitching, whining, moaning, there was too much content. And I'm like, are you fucking kidding me? When I found Pradeep, I went through every single, that was like in 2011, oh, 2012 or something. You know, he has a free blog where he has posted since like 2005 or something. I went through every single post. Then I signed up to his paid site. I went through every single post he made since inception, which was like 6 years or something. You know, when I found Minervini, I read his books. I signed up to his paid site. I went through every single tweet he has tweeted and looked for setups, looked for his entries, look at the setups he posted. When I found Dan Sanger, I signed up to his paid site. I went through every single newsletter. He has newsletters like twice per week or something like that with setups. I went through every single newsletter till the inception, like late 90s. Okay? Trying to understand his method. Trying to understand how he trades, what he trades, what, like all of these things. Trying to understand everything about his method. Okay? So when someone writes to me, hey, oh, I signed up to this site, there's so much content, I don't know where to begin. Shut the fuck up. I'm so close to fucking blocking you. That's what I think about all these bitches, whiners, moaners asking for shortcuts. Now, can I guide you in the right direction? Sure. Follow the link on the screen. But there is no substitute for going in depth and studying different traders and different methods. You have to go in depth. You can't just spend 5 minutes at, oh, okay, no, this is not for me. That's how you learn. That's how you get an understanding for the market. These different structures that occur over and over again in the markets. It's not a discipline problem, it's a confidence problem. Guys, discipline is the most overused word in trading. It's never a discipline problem, it's a confidence problem, because you haven't put in enough effort to build your confidence. If you study enough examples of a certain breakout or a certain setup, you will build confidence. And I bet still, guys, how many of you have spent 500 hours studying one specific setup? Like thousands of historical examples. Be honest. There's maybe, I don't know, 5% of you? The rest of you haven't put in any effort to build confidence. And that's why these things happen. You have no confidence holding for a big move. You get shaken out on one downtick. You know, these things happen all the time. You have no confidence because you haven't built it. Yeah, you gotta combine studying and trading. Well, what do most people do? All they do is putting on some random trades because they haven't internalized the setups yet. And they all do these random things. They promise to use the 10-day moving average as a trailing stop, and then one downtick happens and they're out. We see it daily, people who are struggling to follow the rules. Happens to me too. Happens to me too. But it happens less. You gotta do both. You gotta study hard. You gotta outstudy most people. And you gotta combine it with experience. If you do make no trades and just, focus on theory, you're not gonna be successful. But most people have the other problem. They do no studying and they just do some random things, and then they, join these types of things, Twitch streams and trading services, and hope for handouts. I was like that too, for too many years. Learning the setups, putting in 1,000 hours studying stock charts and stuff like that, that's really the easy part. It's a lot of hard work, but it's the easy part. The hard part is actually managing the trades, position sizing, and all of these minds that are constantly happening, all of these opinions that get thrown at you. Oh, it's a piece of shit company. Oh, it's gonna go up 1,000%. They have this revolutionary technology. But hey, it's all a house of cards. The whole system is gonna crash soon. Sell all your stocks. That's really a hard part. You kind of have to learn to ignore 99% of the information that gets thrown at you, and just trust your system, trust your process. So I just track these movers, the notable movers, and that's how you build. That's how you train your brain to understand setups. Like you track them. This is how you learn how to. What works and what doesn't work. You can read as many books as you want. You can go to as many seminars as you want. And I think it's necessary to get the grasp of the basics. But other than that, to really understand what works and what doesn't work in the markets, you need to do this. You need to track setups. It doesn't matter. Like I track breakouts and episodic pivots mostly, and parabolic shorts. But whatever your setup is, you want to trade, you need to track it real time. You need to track those. See what works, what doesn't work. Not all setups work all the time. And that's how you learn. That's how you train your brain. No one else is gonna do it for you. You gotta do it yourself. You need to put in the work. Every day, every week, every month. This is not a game for the mentally lazy, like Livermore said. How did you manage Well, I didn't. You can't manage your emotions. And I think people who think you should manage your emotions, I think they're full of shit. You should just accept the emotions. And this is why I overtrade. I'm a chronic overtrader. Sometimes I just put on trades. I know they're not optimal, but I do it smaller size. just to get that fix. I need my fix. That's how it is. And it helps. I learned to accept that. I need to make small donations to the market to avoid bigger losses later on, because I do something really stupid. So I do like small stupid things on purpose to avoid doing big stupid things later, if you understand what I mean. I need to get my fix, my trading fix. And these emotions like FOMO and whatever they are, like they won't ever go away. They're always gonna be there. Best long setup in history? Oh, I don't know. There were a lot of best long setups in history in 2020. I mean, I guess it would be like Tesla. There were several best long setups in history on this thing back in 2020. And you know, the fact it was like a mega liquid stock, like the most liquid stock ever, you could do like unlimited size. I mean, there were like 4 breakouts. I traded most of these, like this one, this one, this one, and this one. I traded all. I think I traded all 4 of them, and I underestimated all 4 of them. And I did too little size on all 4 of them. But you know, there was like unlimited money. And also this one a few months ago. The funny thing is, I think I bought it here. I got stopped out here, and then I rebought it, and you know, look at the move it made. Those were like the best breakouts in history. Yeah, mRNA. Yeah, mRNA, not in 2020, but in 2021. That one I was long. This one I had. Again, too little size, and I sold it way too early. I didn't follow my sell rules. This thing literally went up 110% in like 3 weeks from the breakout. BNTX2. This one I didn't have. This one too, once it broke together with mRNA. This is from 2021. But mRNA, you know, this was also high priced, very liquid stock. Can do a lot of size. And the thing is, you only need a few per year. You really don't need 50 or 100 or 500 trades per year. Like, you only need a few good trades per year if you size correctly, right? I'm not saying go all in, but I would say my max size on individual stocks is like, say, 20, 25%. You know, you just need a few of them. You don't need too many. And you're gonna have very good returns. Obviously, you're gonna trade other stuff too, but a few big winners can really make a huge difference. I can't believe how many people I've unfollowed, that I've followed and unfollowed, because I got tired of the bearishness. Like, I started trading here. Here is where I started trading, May 2011. This is a chart of the Nasdaq, literally somewhere here. The market just keep going and going, and ever since I joined Twitter and started reading financial media, or listening or watching financial media, all of these bears, like, they always talk about what can go wrong, but no one ever talks about what can go right. It's so fucking stupid. Yes, there will be bear markets along the way. Yes, there will be corrections. Shortly after I started trading, the Nasdaq corrected 20% in a few weeks. We had a correction in 2015, in 2016, 2017, 2018. And yes, there will be eventually a bear market. But what good is it to call a bear market if you're wrong for 5 years, for 10 years? It's just so stupid. Only thing one really needs to do is follow the price. All these worthless opinions, all the experts and these people, no one knows anything. No one really knows anything. So, you know, the size I've been trading, like, I've never traded this much size before. You know, this, you know, like $3-4 million positions. So that's kind of exhausting. But it was a good experience, because now that's how you take your trading to a new level. You have to force yourself to push size. You have to get comfortable with big P&L swings, Otherwise, I see a lot of, successful traders on Twitter that I've been following over the years, but they cannot push their size. Like, they trade the same size they were trading 5-7 years ago. And it's amazing, like they're so deep into their comfort zone and they're still trading for those, a few hundred or maybe, $500 per day, and they just can't get out of it. Like me personally, I just want to push my size to infinity, every year I want to increase my size. Every year I want to get better and bigger. And I've done it successfully for many years now. That's the only way. You have to push yourself. And Tesla was another instance that I managed to do that successfully. CCO, this thing is all over the place. It's not good, man. It's not good at all. It's bad. This is not a momentum stock. Very choppy, all over the place. I'm just gonna look at the moves it's made, just look at the recent moves it made. Like, is this a momentum stock? Like, it's all over the place. Versus something like LEDs, right? Look at this move it made. Look at how clean it was. Look at how orderly the pullback was. Look at what explosivity it had. And then it had this clean breakout out of a tight range. Then it's the same thing with this one, AHT. Look at how clean it is. Look at the move it made. Look at how big the move was. Not AHT, IHT. No, wait. Yeah, IHT. Look at how clean it was, right? And then you have this CCO. Is it clean? Look at this. It's all over the place. Up, down, up, down, up, down, up, down, up, down, up, down. Is it a clean trend? Is it surfing the 10 or the 20? It's a micro cap, so you shouldn't even be looking at the 50 on this thing. It's not good. You want to be in explosive stocks. Like, the thing for me, I'm always gonna be long at the top. I will always be long at the top. I do not anticipate where the top is gonna be. Like, I'd rather sell on the downside when they start violating the moving averages. I will always be long at the top. Yeah, OPK looks pretty decent. I'm not gonna do it, but it looks like a pretty decent setup. Bounced off the 20-day, built higher lows, taking out this little range here. It's a decent looking one. Yeah, it's a pretty good one. Yeah, it is. It's a pretty good one. Undercut the 20 EMA and now it's bouncing. This is good sign. This is a bullish sign. This is what I talk about. The stock can be down on a day and still be bullish. I did miss this one, but this was a pretty decent setup. This was a very good setup. This one I remember I traded. Opening range rise. I think they reported earnings or something. It doesn't really matter. It found support on the rising 20-day. First bounce of the rising 20 took out this range at 25 on big volume. That's a good setup. Here's a good setup. Surfing the 10-day, building higher lows, getting tighter and tighter, and then breaks out. This one too. First bounce of the 50-day and has a range break here. Bounces the 50-day, breaks this range on big volume. That's a good setup. You can just see how clean. Like, you need clean setups. Something just keeps surfing. It's not all over the place. Like, it just keeps surfing the 10-day. And then the 20-day catches up. Look at this. It says higher lows. And then you have a range here and it breaks that range. Like, this was a good setup. This was an earnings winner. Like, look at it's in a big uptrend. It keeps surfing the 20-day. Then it kind of breaks down a little bit and finds support on the 50-day. Bounces off the 50-day twice. Builds higher lows and then it has this tight range. This is a very good setup. Okay. Big uptrend and bounces clean bounce of the 50-day. You can see it builds higher lows and then breaks this range. Like, this is a good setup, really good setup. Just keeps surfing the 10 and 20-day and then it breaks this range on big volume. Like, this is how it looked like the day before. It's not a super obvious one, but it's there. It's not like a 5-star, but like 3.5, 4-star. This is a 5-star setup. This is a 5-star setup, but it would have stopped you out because on this day here, it took out the lows of this day, right? So you would have gotten stopped out, but the setup here was 5-star. This was also a really good setup. Not a 5-star because the previous day's candle was kind of loose, but it had this big range break and it had been building higher lows. This is also a really good setup. Surfs the 10-day, undercuts it, builds higher lows for 3 days, 2 days, and then breaks out. This was a good setup. You get a bounce of the 50-day. It kind of breaks down, pulls back, finds support on the 50-day, builds higher lows. Guys, you see this? Many times these things build higher lows. Here it built higher lows. Here, here, here. Like before their breakouts, they most of the time build higher lows. It did kind of have a pretty decent setup here. Built higher lows, surfed off the 20-day. But this one didn't have any follow through. Like, you know, just because it's a good setup doesn't mean it's gonna work. Look at this thing. It surfed, bounced off the 20-day, started building higher lows, got tight. Like this is a 5-star setup. It's a really good setup. You have this range with higher lows. This is a 6-star setup on a 5-star scale. You know, you gotta fucking memorize this. This is a 6-star setup on a 5-star scale. You don't get these many of these. Look at how tight it is. Bounces perfectly off the 20-day, gets really tight. This is a 5-star setup. Memorize this. This was a good setup. This was another good setup. Surfed the 20-day, built higher lows. Again, the higher lows. This is a good setup though. Right here. Right here on this day. That's a good setup. This was a good setup. It did gap up, but then, you know, when you have a powerful chart, you know, a gap up is okay. As long as you get it on the opening range high. Anyone can do this. I promise you guys, anyone can do this. You just have to put in the work. Stop following the news. You know, unfollow all of these fucking idiots on Twitter that are calling for this and that. Just follow quality people on Twitter. You know, it's gonna take years to determine who's quality and who's not. But you know, you have to, like every opportunity, you have to learn. Like you have to assess, is this working? What is working? What's not working? You have to study past action. Like I said, the same patterns, they repeat over and over again. I'm pretty much doing the same thing over and over again. I have two main setups, okay? Breakouts. They could be either earnings gappers or they could be like these high tide flags I've been trading lately. Like I've traded a lot of these, both of those setups, but it's the variation of the same, you know. And then the mean reversion setups, like we've seen it on Nikola the past few days, where I've just been, you know, traded the exhaustion gap, and I've been adding on the backside. And then on NCLH and all the cruise lines, airlines today. This is also the same setup, just in reverse. Those are the two, or let's just say the three main setups I trade. And I also have some variations of those. So just like 3 setups. I'm doing it over and over and over again. Ditch what doesn't work. Keep what's working, right? Scale out when the trade goes for you. Get stopped out when it doesn't work. And your money starts compounding. Like, do the math. If you double your money every year, like no matter what your starting sum is, if you double your money, and you can easily double your money. Like, I think my average return over the past 7 years is like 200% per year, pre-taxes and pre-expenses. So, but let's just say you double your money after tax and after living expenses. Just do the math. Like, how much are you gonna have after 5 years, 10 years? That's what's possible. You just have to believe it. You have to believe you can do it. And that's why you need mentors. You need role models. Because it's kind of hard to come to the market not knowing anything and just following these random day traders that front run you. You know, you're not going to compound your money. You're going to compound your losses. And even if you make money, you don't know why you made the money. It's just pure random luck. You need to research the markets. But nowadays, I haven't had any big individual losses, like really big ones where I lose like 5 or 10% of my account. I wouldn't be able to handle it. I was able to handle it like 3, 4, 5 years ago when I had a smaller account, but now I would just, whoa, I don't even know how I would feel if I lost like 10% of my account in one day, shorting some momentum stock. I mean, that just, no. I couldn't be able to handled volatility. Last time I was in a little bit of a trouble was when I shorted Tilray last year. I got in a bad loop. I don't know why, but I started shorting way too early. I tried to short it like every day, and I was down 700,000 at one point. I made most of it back. Like, I actually made all of it back when it finally crashed. And there were other ones like, what are the tickers, man? I don't even remember it. NBEV, yeah, this one. So I shorted this one, and all of them were crashing. So I made it all back, all those 700,000, but yeah, that was rough. But again, that was it took me several weeks to lose that money. So it wasn't like in one day. But yeah, so nowadays, most of my drawdowns are, like, if I have a lot of positions going, like say I have 10, 15 swings, and they all turn around at once. So most of my drawdowns now, they're from highs. Let's say I increase my account by 30%, and then I give it back a third of it. The worst kind of drawdowns is when you have already lost money for a while, or been going sideways for a while, like going sideways for months and months, and then you have big drawdown. That's really demoralizing. That's the worst kind of drawdown. The best kind of drawdown is when you had it, things been going really, really well, and then you give some of it back. Like, let's give you an example. Like here, back in 2014, late 2014, when I lost half my account in one day, I had been on a big run for the past 6 months or so. Meanwhile, here, I had a drawdown. Yeah, this is where I lost that 700k, I think. I had been going sideways for like 3-4 months, and then I had a big drawdown. Now that's demoralizing. That's really demoralizing. So there is a difference between a drawdown and a drawdown, in my opinion. Even though even if you lose the same amount of money, psychologically there's a huge difference. You want to make millions, you gotta work for it. And once you get it, like once you really get it, you're gonna make so much money, you don't know what to do with it. I promise you this, guys. I started with like 5,000 first time I started in 2010, 2011. I blew up 4 times in the first 2 years. And now in the past 2.5 months, I'm up like 6 million. Like pretty much a third, or pretty much 40% of all the money I made in the markets I made in the past 2.5 months. That's compounding. If you double 100k, you're gonna have 200k. If you double 5 million, you're gonna have 10 million. If you double 10 million, you're gonna have 20 million. And that's what happened to me, pretty much. We've been very aggressive over the past few weeks and even months, and now is again a time to take a step back and just manage. It's like managing a garden. You pull the weeds and you water the flowers, like Peter Lynch once said. Hold the winners, sell the losers. Hold the ones that show relative strength, sell the ones that are not. It's like managing a garden. Trading is not about rocket science, it's about gardening. You don't need to be very smart, you just don't have to be dumb. And that's exactly what you want to see. These kinds of down days are golden. The down days will tell you which one of your stocks are weak and which ones are not. It's a gift. Yeah, guys, I'm really telling you, in this type of market condition, when you have a lockout rally, look, if you don't have imagination, you're not gonna have, explosive returns. You need, like I tweeted like last week or whenever it was, you sell stuff a few days, a few weeks too early in this type of market environment, you're gonna retire 10 years later. Well, let's put it this way. Your financial goals will come true 10 years earlier if you just have some imagination. That's the type of market we're in. The second you think you're smarter than a 10 or the 20 day, that's when you're doomed for mediocrity. Trust me. I talk from experience. Being a successful trader is a tough life. Being a consistently successful trader is a tough life, man. You gotta put in so much effort to get to that level. Most people just give up. You know, if you want to be a successful trader, you really need to want it. You really need to want it. If you think you're gonna do this on the side, you know, make some money and then go do some photography or art the rest of your life, you're not gonna make it. It needs to be your calling, otherwise you can just put your money in the index funds. You'll be better off. Yeah, you need to be a little bit obsessive. Like, you can't have too many other things, you know, you can't focus on too many other things. But it's the same way with everything. You want to be a, I don't know, top performer in any field, it's the same thing. That needs to be your main focus. You can't do something else on the side. It's the same thing in, you know, whatever. It needs to be your main focus. Guys, you only need one bull market to get rich and change your financial futures. You only need one bull market. Learn the setups, learn what moves markets, learn how stocks move, learn what moves stocks. You know, memorize the patterns, and you only need one bull market to change your finances forever. And now I'm just talking about this specific like breakout and earning strategy. There are obviously other strategies I use too, but right now I don't have any shorts on or any mean reversion trades on. So what's my target for my Tesla short? Whatever price target Jim Chanos has on it. Like, I try not to think too much on my own. I just feel like I'm more profitable the less I think. And everything all my concepts I borrowed from others, so I may as well borrow my price targets too. I get so much more energy and brain power for other stuff that are not market or related. It's just a win-win. I think the biggest problem people make is they think too much. You really should think less. You should just have solid rules, solid setups, and just think less. And you'll be so much more profitable. Well, at least I have a new big loss. But you know what happens every time I take a big loss? My trading goes to the next level. Because if you take a big loss, right, and you like make it back or make most of it back, you know that, okay, I took that big loss, I survived. And then you can take your trading to the next level. Like, if you're gonna scale your trading up, right? If you're gonna go from trading $10,000 positions to $100,000 positions to multi-million-dollar positions, you know, you're always gonna take new record losses. That's how you scale your trading. Record gains and record losses. That's the way you scale your trading. You gotta get used to it. It's gonna happen to me many times over in my trading career. I never experienced something like this. And that's the thing in trading. You gotta be prepared for anything. Like, literally anything can happen. That's the thing. And you know, it doesn't happen, but every year something crazy happens to you in trading. Gotta be, you know, obviously you can't be prepared for everything, but you know, you just gotta be prepared for the fact that something crazy is gonna happen, no matter what. Find my Druckenmiller, like, guys, you know, like, this is what it takes to succeed, okay? Like, I have these notes for great investors, great traders. Let's just take, I haven't updated this in a while. Oh, he's back, for fuck's sake, he forgot something. No, never mind, that's his dad. He also has a moped, apparently. Oh, Jesus Christ. Moped attack here. Moppepojkar, yeah. Alright, let's look at the Druckenmiller file. Like look at this. And I haven't updated it in a long time, since March last year. I still have a lot of notes here, unsorted, 2251 notes. I mean, he has a lot of like, there's so many things. I should probably summarize this. Like, there's so many great interviews by Druckenmiller. Like, read everything with or about Druckenmiller. Like, you know, instead of listening some fucking moron selling a service on Twitter, listen to a guy who's pulled out billions from the market. He compounded 30% for 30 years without having a down year, okay? There's so many lessons. Like, he shares his good trades, his bad trades. Like, he was skeptical, like in the late 90s, he was skeptical about the internet stocks. Like, he saw everyone else making money and he was like long value stocks, and then suddenly he's like, fuck it, I want to make some money too. He bought a huge position near the top in March 2000. He lost like $3 billion in a few weeks or something. Then he kind of got out of the trade. He kind of bought the top because he couldn't take the pain of seeing everyone else making money and not him, right? He took a $3 billion loss on that trade, and yet he had a profitable year that year. Like, he has so many amazing trades. He's not a believer in diversification. He's a believer in, if you see something really good, something that comes around a few times per year, you bet big. You bet huge, and then you watch that position very, very closely. And he's also a believer in technical analysis. Just, you know, he watches price closely. Or not closely, but he makes his buy and sell decisions based on the price action. There's a lot of, like, I have so many. Jesse Livermore, Peter Lynch. Many of these are like investors, many are traders. Paul Tudor Jones, another trader you should study. There's a great documentary about him when he shorted the 1987 crash. It's on YouTube. Everyone should watch it. Look at the Nasdaq. I'm gonna tell you right now where my biggest gains have came. This period here, I made 50%. DVAC long, backed long, AMD long, a bunch of stuff. 4 weeks, okay? This here, I tripled my accounts, or maybe even more. This was an insane period. We had a high breath rally. This rally here, again, I'm probably tripled or quadrupled my accounts. Coming off, big, these corrections. This here, coming off, like pretty much a 5-month chop. This period here, also very big returns. That's where my money came from. This period here, nothing new. It's just the same thing all over again. Just the game is the same. Just the tickers are different. And the players are different. If you learn the game, you're set for life. Your children will be set for life. Your grandchildren will be set for life. And depends how retarded you are, maybe even more generations will be set for life. It's all about you. If you learn the game, you'll realize just the same thing over and over again. You can make money in most market environments. Like, if you're one of these growth stock guys, just trading growth stocks or tech stocks or whatever, you would have been killed the past 6-7 months, right? But instead, if you listen to the market, they're completely agnostic what type of stock you trade. You can catch these names, you know, Ford, right? I bought this thing at 20 bucks the second time around, right? Look at this setup. Focus on the relative strength names. MU, the same thing. When I bought it, some people were like, isn't it too late to buy it? Like, what do you see here? Well, it's an EP. It's a stock that's been going sideways for a year. It has a high volume, reported earnings, it beat. It's a classic episodic pivot. Very simple setup, right? And it had been showing relative strength before the EP. And now these steel names and uranium names are going higher. Now, the jury is still out if they're going to have any follow through, but right now they look really good. You know, you stock the good setups. You look at things that show relative strength. And you can make money no matter what type of stocks lead, you will be in the leaders. Doesn't matter if it's value stocks or growth stocks or shit stocks or quality stocks or this or that. Doesn't matter. Early this year, the money was in the shit stocks. The big moves were in the shit stocks. Stuff like QS was an amazing trade. Actually, that was late last year. Well, late last year, early this year. Stuff like Fuel Cell, also late last year, never mind. Anywho, you know, that's where I made, like, late November last year to February this year, most of my money was from shit stocks. Patterns are very important. It's the same patterns occurring over and over again. If you study thousands of leading stocks over the past 100 years, you will see the same patterns occur over and over again. You get these type of patterns, like triangles, like flat tops, higher lows. You get stuff like this, like you get channels. Like these are like this. These are the patterns that occur over and over again. Let's look at some examples of stocks. Let's just look at Tesla. This has been a good one. Like the ones we bought. This one, you see this? Flat top, higher lows, right? Which one is it? It's this one, okay? Here, another one. You have lower highs, higher lows. Which one is it? It's this one, right? And then we have something like Pinterest, which is, well, it depends how you define it. It looks like a channel, right? Same thing, you know, Twitter. Twitter is not a channel, but Pinterest is a channel, right? This type of a setup. Now, NIO, which one is this? What does this look like? CrowdStrike, I bought 2 days ago. What does this look like? Okay. MDB, this is more of a longer term. This is not like it looks. Look at the weekly chart. It's much clearer. What does this look like? It's the same patterns over and over again. Fastly, what does this look like? ESDC, what does this look like? Some of them are not super obvious. Zillow. I first bought it here. What did that one look like? First you had like this, and then you had a base on a base setup. You had like a small channel. Oh, sorry. This is where I bought it initially, and then I added on this day here. What does this look like? Like if you know, why didn't you follow what ARK did here, right? But now up here, now it's interesting to see what they do. It's like it's the same cycle over and over again. Don't be that guy. Be the guy who realizes these things go in cycles. It's the same patterns over again, just the players change, the game doesn't change. And you know, you will be able to afford anything. Your kids won't have to work. Your grandchildren won't have to work ever in their life. Be different. Listen to the market. Exactly. Indices go up on lower volume. Guys, low volume is good. Indices go up on low volume. They go down on high volume, they go up on low volume. Yeah, but on individual stocks, big volume is good in breakouts. But on indices, it's low volume, usually. You can just clearly see, if you look at the like Nasdaq 100 or whatever. You can clearly see. If you just look at the daily chart. The red bars are generally bigger than the green bars. The best runs were on low volume, like something like late 19, early 20. Look at this, low volume. Then you had a sell-off on high volume. How do I handle stocks that break out and go sideways? Well, it depends. I mean, if it's a really, really good setup, it doesn't stop you out, and there's not much going on, you know, you can keep it. But if you have a lot of other stuff that are going straight up, and you're sitting in something that's not performing, and there are other things, you know, good-looking setups, you know, you just cut it and get into something else. Especially like if you're in a really good market for the setup you trade, there's no reason to sit in something that's not performing. You want to compound, and you're not going to compound if you sit in, you know, stuff that's not moving in a market where, you know, that's really good for your setups. But I had two trades on it. First one was when I bought it right out of the range, then I added, and then I flipped short on this day here, and then I rebought it when it broke out of this range. You see, it's the same thing. Tight ranges. Focus on tight ranges. Doesn't matter if it's on the 60-minute, the daily, weekly. Tight ranges is what you should be focusing on. So many people focus on these random breakout stocks, setups that are coming off of wide and loose. Wide and loose is for losers. Tight is for winners. And this is what you always want to keep an eye on: stocks that have, you know, the bigger the first leg higher, the bigger the second leg higher is gonna be. So let's say the first leg higher is 50%, and then it goes sideways, flags, puts in higher lows, all the usual stuff. I mean, the second leg higher could easily be another 50%. But if you're trading a slow moving stock, if the first leg higher is 10%, the second leg higher is probably not gonna be 50%, if you understand what I mean. You want the strongest names, and sometimes it's the stocks that have gone up the most that are going to keep going up the most. Stop fishing? There is no such thing as stop fishing, guys. Get those conspiracy theories out of your heads. No one cares about your stops. There is no one out there gunning your stops. Algos are playing around all the time. Sometimes they hit your stops, sometimes they don't. There is no such thing. Algos going for quick shake? No, I mean you should you should always obey your stops. It doesn't matter if an algo goes, if it's a shake-up because of an algo or not. Like, it doesn't matter. You should always obey your stops. Do you think? Well, yes, you can make money if you have a full-time job, but the thing is, to get to the profitability level, you need to put in a lot of effort. A lot of concentrated effort over a several year period. But once you get it, like once you get all the bullshit beliefs out of your system and really can focus on the things that work, I think you can do a lot of things on the side. Like you don't have to focus too much on the market, but it's a very hard thing to do to get to the level where you only focus on like very, very few things. I'm not able to do that. But some people can. But I don't think you can. I don't think it's easy to get to be a profitable trader if you are doing something else full time. It's incredibly hard. It's incredibly hard if you put in a full-time focus. It's even harder if you do something else full time. I don't know. I haven't tried it. I've always focused on this one thing, except for in the first couple of years where I lost money. Okay, pretty much I'm having two conversations on Twitch. It all boils down to, okay, every question pretty much I answer with, because I'm not an alert service. I don't give a shit. I'm not here to scalp my followers. Everyone needs to, if you haven't done this yet, if you're struggling, if you're not getting the results you want, you get TC2000, okay? Click US stocks, okay? There's 4963, almost 5,000 stocks here, okay? Then you go to the monthly chart, and then you start looking at all the big moves. Every stock that made a big move, let's say it doubled or tripled or in a short amount of time, okay? You put in a separate watch list, okay? You're gonna get a watch list of 1,000 stocks. Just go back and look. You know, there's going to be thousands of, at least 1,000 stocks, because most stocks have made a big move at least sometime during their lifetime. Okay, you go back and look. The biggest moves, obviously the very liquid ones you can exclude. And then you go through that watch list. Look at the daily charts. You can get e-signal. On that one, you can go back on the daily charts, look at daily charts, and even intraday charts going back 10, 20 years, 30 years. Maybe not 30, but at least 25 years. And then you start looking for patterns, okay? And you will see the exact same setups I trade. They happen over and over and over again. And you're probably going to find your own setups. You're probably going to find at least 3 to 5 setups that occur over and over and over again. 3 to 5 patterns, okay? You need to build a foundation. You can't just trade blindly, not knowing, following some other trader, being in these alert services. No. You need to develop your own expertise. You need to develop your own setups, things you believe in, things you have back-tested, that you know they work. That's pretty much all your problems stem from not knowing what the hell you're doing. All the ones who are struggling trading or don't have the results you want to have. You need to spend at least 1,000 hours doing that study. Okay? If you do it 3 hours per day, it's gonna take you a year. Okay? And you will have a skill for life. You will have a skill for life. You only need to do it once. And you probably won't have to work a day in your life. But you need to do this, okay? Fucking rocket science. You don't have to sit here, there's what's the low of this candle? Oh, it's 37.35. Let's put the trend line here, and then we'll put it here. That's just moronic. It's stupid. Just draw the fucking line. It's not fucking rocket science. And throw away the useless TA books you've read. What you should do is go through every stock in the US stock market, go back as far as you can, and look at how stocks move, okay? And you'll quickly realize 99% of technical analysis is complete bullshit. You want to buy them near the moving averages. Like, if you study, I see these suggestions all the time. Like, guys, seriously, like, if you haven't spent, like I talk about this, if you haven't spent at least a few hundred hours studying breakouts on all the US stocks, you should probably even not put any suggestions in the chat, because the thing is, one thing you will find is the best breakouts, pretty much all the great breakouts, happen from when the price is at the 10 or the 20 moving average. Okay, not when it's way above. That's one of the first things you will notice. I'm always talking about surfing the moving averages. You will see it for yourself, guys. It's not a mythological creature I'm talking about. You will see it yourself. You Yeah, and sometimes I break my own rules. I bought space 2 days ago, but I shouldn't have done that. I knew better, but sometimes FOMO gets the best of me. But now the 10-day is starting to catch up, and look how clean of a move it is. At one leg higher, and now it's digesting with higher lows. And then you compare to something like IDEX. Like, okay, I see it has higher lows and everything, but it's hard to explain. Like, you need to do the work, and you will see it for yourself. You will learn how to identify a good setup. But the key rule rule of thumb is the 10-day and or the 20-day needs to catch up to the price. The stocks are unless in this type of market we're in right now, sometimes stocks don't even wait for the moving averages. Most of the time they will. Like even in this market, look at my home runs. Till rate, this thing more than doubled on me. Look at this thing. The 10-day caught up. The price even undercut the 10-day several times. Look at what is it? SI. It undercut the 20-day. Look at how tight the 10 and 20-day. The price caught up. I didn't buy it here, right? I bought it here when it developed the flag and also MSTR. Where did I buy it? I didn't buy it here. I didn't buy it here, okay? I bought it here when it flagged, showed relative strength, and the moving averages had caught up to the price. And look at how the volume is increasing as the price is increasing, which means the dollar volume is going up exponentially. I'm gonna show you guys. Like most of the money usually comes in on every big market move ever. Most of the money comes in near the top. Now look at the dollar volume on this thing versus share volume. Look at this, how it's going up exponentially. Now all these people who are, I don't know who's buying it up here, funds or individuals or whatever. Why didn't they get excited about this thing, down here? Now people or funds are just buying because the share price is going up. That's called momentum. And if you can create the setup around momentum, you can buy anything you want. You will never have to worry about money again. And probably your kids won't have to ever worry about money again. Trading is such a pain in the ass. It's such a mind fuck most of the time. Like most people can't handle it. That's why it's so important to have specific setups. And even then it's like constantly a mind fuck. Now imagine being, wasting your time watching like CNBC and stuff. It's like a double mindfuck. That's why I just, try to cut out all distractions and just focus on what's going on in front of me. Focus is so important in this business. Well, it's focus important in any business, obviously, but in this business, if you're not focused, it can be the difference of you living on a yacht or versus you living on the streets. That's the difference with trading compared to other professions. You know what I've always struggled with? Like many of these beaten down former runners, like how far they can actually come back. That's always something, you kind of don't believe it. You're looking at it down here like, what a piece of shit. And then, 2 weeks later, it's a double. Like, trading is really an imagination game. You really need, I think the one with the biggest imagination wins. Assuming everything else is in order, like, risk management and all of that stuff. And the people who try to rationalize everything with, numbers and balance sheets and valuations, they are mostly gonna be, mediocre. Because the biggest moves in the short and medium term time frame is usually stocks that can't really back it up with, business fundamentals or valuations. And that's especially true in this part of the market cycle where we've been in a bull market for 12 years. People willing to, buy anything and everything. Yeah, investing and trading are two different things. But we've seen it in investing too. People who are stuck in the, pre-internet era with their valuation models, they had very mediocre returns over the past 10 years. They missed all the big winners. Instead, they're long some, I don't know, oil gas names. You're never gonna sell everything at the top. Just get that thought out of your head. So you're gonna be in a drawdown probably 99% of the time. Not 99, 95% plus. Remember that, guys. You can make 500% in a year and be in a drawdown 95% of the time. That's just how it works. If anyone's gonna tell you otherwise, they're a liar and probably trying to sell you something. I even tweeted about it. I think I have the tweet posted on my blog too. Like, look at stuff like Netflix over the past 10 years, or Amazon. Like, just something like Netflix, one of the best performing stocks over 10 years. I went through this on the stream before. But let's say if you start counting from like 2011, all these boxes, that's when the stock was off from the all-time highs. Which means that was the time when it was in a drawdown. This is one of the best performing stocks over the past 10 years. And you can see it spent like, 50% of the time in a drawdown. That's just how it works. Actually more. Probably 2/3 of the time it was in a drawdown. Now it's in a drawdown again. Where this ends, who knows? That's just how it works. You're gonna, no matter how good or bad your returns are, you're gonna spend most of the time in a drawdown. No matter what. Only time you're not gonna do that if you're like a day trader or like a scalper, one of these guys that make $50 per day and they're super happy about it. And they make like $50 every day. They make like 500 trades, end up with $50. Those guys are gonna be, they're gonna make money every single day.